I'm here with Tim, the Source Anderson, to talk about what he just said, the topic du jour, the Fed. Hi, Tim. Thank you for joining me. I guess we will attribute these gains today to the Fed. Is that correct?
It's certainly very clear that the market really likes what it's heard so far from Federal Reserve Chairman Powell. He didn't quite take a big magic marker out of his pocket and write on a whiteboard, we're cutting rates in 3 weeks, but he might as well have, because the messaging is very, very clear. They mentioned that business investment has slowed considerably. He mentioned inflation is still at around the 1.5% level with no sign at all that it's lifting toward their 2% target. And he also mentioned that there were a number of members that were very much leaning toward easing at the last meeting. Although there was only one dissenter, frequently there can be members that are leaning that way, but they still vote with the majority. And it's very clear that they're going to cut rates in 3 weeks, from today actually, a quarter of a point. And then we'll go from there. We probably get one more cut at least before the end of the year. And it will also be, I think, although not too many people are talking about it, there's this balance sheet runoff issue that they're dealing with, which is really the unwind of all the QE that they started to do about 8 or 9 years ago. They had been planning on curtailing that in September. It's very likely that if they cut rates in 3 weeks, that they will also say they are ending their balance sheet reduction program at the same time. Because when you think about it, it would make no sense at all for them to be tightening through their allowing bonds to continue to run off and easing by lowering interest rates.
All right, so Tim, I'm going to start with the good news, and then I'm going to go with the bad news. The good news is it's so exciting here on the floor. We peaked above 3,000 in the S&P. The NASDAQ also hit an intraday high. But the bad news is we sold off from that. So why did that happen, Tim?
Look, I just think there's a tremendous amount of psychological and technical resistance at the 3,000 level on the S&P 500. But what's significant is even though the pullbacks that we had the last couple days this week and even on the Friday just after 4th of July, the S&P continues to hold what was its prior all-time high of 2945. So I think that that's meaningful. I think we're seeing some very well-deserved consolidation by the market. And you're having also some rotation right at the beginning of the second half of the year. Remember, investors have all their performance numbers in now for the first half, and they're making a lot of rotational decisions as to where they want their money to be allocated for the remainder of the year. The Dow is just a few points above its prior high right now at 26,828. And the NASDAQ continues to hold that 8,100 level. I believe 8,150 or 8,160 was the high for the NASDAQ set about a month ago.
Okay, so Tim, we like a consolidation, but is this kind of consolidation a tight wire where we're going to fall off, or will it create a nice base for us to go higher?
My feeling is it's creating a base from which there will be another move higher. Now, there are obviously a number of variables in play. Trade negotiations. We're just on the cusp right now of what will be a highly scrutinized second quarter earnings season. And then, we'll have to see how the remainder of Powell's testimony goes throughout the end of today and tomorrow. But his opening statement and everything he's said so far is clearly telling the market that they're going to cut rates a quarter of a point 3 weeks from today.
Well, thanks for pointing that out, Tim. That's Tim, the Source Anderson.